Hello, welcome and good afternoon to the participants on this important talk about the government intervention and the business needs in the current unprecedented situation on COVID. ASSOCHAM along with its member and specialists have been working over last several weeks, have had the conversations both with the industry members as well as with the government, and having regard to all that has happened so far in this dynamic world, has compiled a list which proposes to the government the ask from industry in the two critical areas of tax regulations, both the direct and indirect tax regulations. It is ASSOCHAM's belief that the regulatory intervention by the government in such times can actually help both end or mitigate the impact of the crisis, as well as help the new green shoots come up fast. The ASSOCHAM's recommendations are driven from four underlying principles which this situation has presented. First, the situation has resulted, as you and I know, in lot of activities being done or not done by force and not as a choice or a volition by the businesses or people. So you would find that the recommendations and class of them are addressing the issue as to the impact of the forced situation should get mitigated or neutralized. That's point number one. The second driver is all across, both with the government as well as businesses, as well as individual citizens, employees, vendors across the ecosystem, there is a severe stress on cash, and therefore there is a cluster of recommendations that deals with the aspect, and it is done in a very balanced manner. It is dealing with the aspects of mitigating the adverse impact on cash flow on the businesses and its constituents, including the employees, vendors, small scale industries, suppliers, and everybody. The third driver for these recommendations which we have kept in mind is that given the situation, quite a lot of businesses would consider to repurpose themselves or repurpose their business model or repurpose their activities to meet the new needs of society and to align with the future requirement. And therefore, another set of recommendations you would find which are dealing with the aspects seeking the government indulgence and intervention so that this movement or shift or drift to the new business models or the new repurposed activity is done smoothly without having to spend too much time in the approval process or intimation process or processes of the kind which are avoidable. And lastly, in relation to all that we have seen so far, we all understand that the forecasts of the businesses are completely out of whack. And for most businesses and most income earning and expense paying community, the forecast being out of whack requires the intervention of very different kind other than the business as usual. And the other set of recommendations in fourth category are the recommendations which help the businesses and the constituents, including employees and the vendors and the civil society, to deal with the situation of this forecast going completely out of whack in the current situation. In no way the recommendations that ASSOCHAM makes in this conversation are comprehensive, but these are compilations done, as I said, taking input from various conversations so far. It is a dynamic situation, and therefore ASSOCHAM would also keep pace with this and keep interacting with you all participants, and also in turn with the government and the other agencies which matter to help us in this situation. How we have structured this talk: first, I would invite our colleagues on indirect tax to deal with the recommendations on the indirect tax matters. Then I would invite the team for direct taxes to deal with the recommendations on direct taxes and transfer pricing. And at the end, we would reserve a time of about 30 to 35 minutes to do the question answers in a manner that you could express your question, or you could also express your comment if there is something which is compelling you want to bring to the notice of other members and also to the committee. So with this, I would hand it over to Prateek Jain, the chairman for SOCHM Indirect Tax Committee.
Thank you, Rahul, and good afternoon, everyone who was there on this webinar. As Rahul has already set the context, our indirect tax recommendations are also geared up or in the same direction. One is to preserve cash for the businesses, other is to provide procedural relief to the businesses, and third, changing the government sort of policies in line with the new normal that we all have. This is going to be an evolving process. So this is the first set of recommendations that is going from our side. I'm sure that there'll be more that we will do. I'm joined by Mr. J.K. Mittal, Mr. Paras Jain, and Ritesh Kanodia, who will also sort of provide their inputs in the process in the course of the discussion on indirect taxes. So if we can move to the first slide on indirect tax, and we'll start with GST. Next one. We'll start with GST. One of the key recommendations that we are making is that, look, GST is payable on invoices. So once I raise the invoice, irrespective of the payment to be received from the customer, the supplier has to pay GST. In many cases, we are expecting now that payment defaults will start happening. And if you pay 18% with the general rate of sort of tax in the GST, and you don't collect the payment from the customer, then you are out of pocket. If you recall, there was a time under service tax regime where service tax was payable on collection basis when we started that system. And we are recommending the government that in order to provide that cushion from cash and liquidity, we should bring it back. GST should be on collection basis and not on invoicing basis. Now, whether this recommendation will be accepted or not, that we will have to see, because it does require some significant changes in the law and also in the IT systems, including the way ITC is currently being claimed. The next is relaxation in interest applicability. So if you remember that for smaller businesses up to 5 crores of turnover, the government has said that the tax which pertains to the month of March, April, and May can be deposited in June without payment of interest. However, for bigger businesses beyond 5 crores, there is a provision that tax has to be paid with 9% interest in case you pay it after the due date, which is 15 days. There is a 15 days window which has been provided, but beyond 15 days you have to pay interest of 9%. The industry believes that interest of 9% is very steep, and in line with the smaller businesses, there should be blanket exemption on this interest as well for the larger companies as well. The third is on extension of time period to avail input tax credit, because there would be situations where the credit notes, and this point and the next point, I'll take it together, that there could be a situation that once the lockdown is over and then business normalizes, you might see a lot of companies issuing credit notes for price reduction, discounts, etc. As of now, there is a time limit for credit notes, which is for 18-19, it was September 30th, 2019, which is already gone, and for 19-20, it will be September this year. So what we are recommending is that this provision, or there should be an extension of time period to avail ITC. For 19-20, it should be extended from September 2020 to March 21. And even for 18-19, the time period which has already expired should be extended retrospectively, again to bring in some liquidity for the companies. If you move to the next slide. In this presentation, we are not discussing in detail about the recommendations on GST exemptions. You might have already read about the recommendation that ASSOCHAM has made in this regard. This one is limited only to few items, which are for manufacture of medical equipment, sanitizers, masks, etc. We are saying that at least for that, there should be a GST exemption that should be provided immediately. And also, goods purchased to manufacture such items, should also be provided a cash refund, because if there is an output GST exemption, this credit should not be lost. We're also saying that input tax credit on donation of medical equipment, there should not be any requirement of reversal. There is, of course, is a matter of debate as of now whether any donation of such kind can be said to be used for business purpose or not. What happens to the CSR expenses? We want an explicit either a clarification or an amendment to say that there's no ITC reversal which will be required. You would also know that under Section 17(5) of the CGST Act, there are several restrictions which apply on input credit. One of them is that you should pay a tax within pay to the vendor within 180 days of the date of invoice. And we are saying that this 180 days period should be relaxed, and also government should consider relaxing the conditions under 17(5), wherein certain restrictions are provided that employer related expense you can't claim a credit, or works contract you can't claim a credit. Now this will be of course this will require a legislative change, but there are exceptional situations which demand exceptional action, and we are saying that this should be something that government should consider. We're also saying in order to leave more cash with the businesses, that credit accumulated for last 6 months should be refunded in cash. So typically the provision is that whatever ITC you've accumulated, you can carry it forward to the next year. There is no restriction in carrying forward. But today refund is only allowed if you're exporting, or if you have an inverted duty structure problem, meaning the tax on your raw material is higher than tax on your finished product. And also there is no refund for excess tax paid on input services. So under inverted duty scheme also, the refund is only allowed for raw materials but not for input services. So what we're saying is that because of this situation, there are a lot of companies who might face a situation that they have bought a lot of raw material, they have inventories, they have consumed services, but they may not have output liability. And in that situation, it may not fall under the inverted duty structure problem, but still you should refund the accumulated credit back to the businesses. Of course, there could be certain safeguards that government might want to adopt. Moving on to the next slide. Next point is on GST refund related applications already there. There's already some movement has happened on this. There was a recent guidance which was issued by the government that this refund should be expedited. What we're saying is that whatever refund is stuck at whatever level as of now, if it is not already part of the appeal process, then you give 90% of the refund immediately, okay, to ease the cash crunch. And refund should also be allowed on capital goods and services, as I said, in case of inverted duty structure for a limited period of time, which as of now is not allowed. Contribution towards COVID-19 to be treated as zero rated supplies. That would mean that while I don't pay tax on that, I still get input tax credit. This is a point that we made earlier also. The government should also consider providing an interest-free loan so far as GST is concerned. So you collect GST, but you don't deposit with the government for, let's say, a period of 1 year, and after 1 year, it's like a working capital that you are leaving with industry for some time. The next point, and this is something which already happens in more developed part of the world, in EU and other places, where you don't pay you don't pay tax under reverse charge if you have an output liability. There, in most cases, it's like a debit and credit. You don't pay tax at all. What we're saying here is that a lot of companies have to pay under RCM, where they still have input credit with them, which they have to use against output tax or claim as a refund, as the case may be. Why don't you allow using the input credit to pay tax under RCM, which is reverse charge mechanism? RCM could be import of services from outside India. It could be things like freight on which you are paying, as a service recipient. So in both the cases, the liability should be allowed to be paid by accumulated input credit. Moving on to the next one. Today, the input tax credit, you maintain pool on a state level basis. So the ITC which you have accumulated for the state of Maharashtra, you can't use against the output liability of Karnataka. What we're saying is that at least for CGST and IGST, and one can understand that as far as state GST is concerned, it's a state specific basis, but CGST and IGST, why don't you make it fungible? And if I have input credit excess in one state, that should be allowed against output liability of another state. The next point is on bad debts. If the government accepts the recommendation that GST is on cash basis, this will not be required. But if they can't, then what we're saying is that at least provide a bad debt relief. In other words, if I have paid GST today and I'm not able to receive payment from the customer, then please allow me to claim a refund back or adjustment of the GST which I have already paid. Again, the idea is that indirect tax is to be collected from the customer, and if the customer is not given the money, then in this sort of situation of crisis, it may not be proper for the government to collect GST from the suppliers. Extension of due date for filing GSTR 9 and GSTR 9C, which is your annual audit for 18-19. As of now, the date is June 30th, and we are recommending that this should be extended to September 30th. Moving on, over last 3-4 months, since the rule changed and now it has got deferred, that you cannot claim credit which is in excess of, earlier it was 120% of what is reflected in the portal, now it is 110%, and now it has been deferred for some time. Many companies, the electronic credit ledger was blocked from the back end by GSTN. Now they have all approached the authorities, the relevant jurisdictional commissioners, to unlock that, but that has not happened in many cases. What we're saying is that while the process of scrutiny continues, on a temporary basis, those accounts should be unblocked so that they are able to freely claim the credit. It's an issue for FMCG, it's an issue for telecom and many large companies. The next one is more structural in nature, given the fact that airlines will be hit hard along with several other sectors. Either you refund the excise duty paid on ATF if that is possible, or you consider bringing ATF under GST immediately so that the airlines can claim a credit of GST paid on ATF. Or if the government wants, they can allow excise duty also as a credit against output CGST liability. But idea is that tax paid on ATF should not be a cost for airlines. In line with the recommendations on procedural relief, we are also recommending that there should not be any blockage of e-way bills, either because it has expired or there is no GST returns which has been filed with the taxpayer. Though all these conditions should be removed, at least on a temporary basis. We also heard from a lot of members that because of the lockout, it's not possible to use a digital signature to submit the returns in many cases, and therefore we are recommending that there should not be any requirement of DSC, and the government should accept the return without DSC at least for an interim period for next 2-3 months. Moving on now, I'll take 5 more minutes. Coming on custom duties and foreign trade policy, there are a lot of procedural relaxation which the government has already given here. Almost on an everyday basis, you will see some circular, some clarification, some notification coming in there. What we're saying is that it's also important, while the procedural reliefs have been given in most cases, that there is a deferral of custom duties which is there. At least you can do it for large importers who are registered for AEO, Tier 2 and Tier 3 status holders. You defer the custom duty, you will allow them to import without payment of custom duty, and which can be paid later. Okay, let's say 2 months from now or 3 months from now, as the case may be, without any interest, of course. We're also saying that the pending applications for SEIS and MEIS and all the refunds, drawbacks, etc., should be processed very, very quickly. We know that there are a lot of SEIS and MEIS applications which have been stuck for some time. There have been interpretation issues on SEIs in many cases, and there are, a lot of reasons because of which it is stuck, and we're saying it should be immediately released. On MEIS, what we're saying is that 2% MEIS incentive was withdrawn from January 1 to 2020, and we are saying that it should be brought back because we want to give that support to the industry as of now. We're also saying that CIS rate, the government should consider increasing it at least, on a temporary for a temporary period to boost exports. Next, and I'll not go into details of it, but next slide is more about some of the waivers that we're seeking. One is the import of waiver of IGST on import of medical equipment, because of course there is large scale of medical equipment, surgical masks and ventilators, etc. is happening. Some exemptions have already come over last 1 week, but wherever exemptions are there, we're saying IGST should be completely exempt. There should be complete waiver of IGST and cess for contribution made towards COVID-19. There could be a declaration that could be taken from the importer, and there should be exemption provided there as well. For realizing the export proceeds, there are certain time limits. We're saying that those time limits should be extended, because in many cases, because of the situation currently, the Indian exporters may not be able to get the money back in time. So that should be extended as well. We're also saying that there should be extension in warehousing period. It should be extended to 60 days instead of 30 days, and without any extra charges. Moving on, the last slide. We are talking about delay in submission of annual performance report and QPRs. We're saying the time period to file these reports should be extended, and there should not be any penal action should be taken against the industry on this. And also the requirement of NFE earnings should be relaxed for a specified period, at least for next 6 months to a year. Fast tracking of export redrawback in line with what we have already recommended for the other exports. The third one, waiver of requirement to furnish bank guarantees. Some bit of development has already happened here. For example, in case of SVB imports from a related party, now PD bond can be given on a letterhead and not on a stamp paper. And similarly, on a case-to-case basis, we are aware that commissioners of customs have been sort of giving this relaxation in many cases. Also, we have asked for extension in timeline to file bill of entry. The time period for filing the bill of entry, we're saying, should be extended to 48 to 72 hours, or there should not be any penalty for delayed filing of bill of entry. Now, as Rahul said, we're not saying that this is exhaustive. This is based on what we have got as a recommendation from our members. I'll just pause here, and in case Ritesh, Mr. Mittal, Paras, if you want to add anything, please do add before I pass it on to Rahul back. So maybe Mr. Mittal, you like to add anything to what we have already discussed?
Thank you, Mr. Pratik. I think you have covered extensively our recommendations. I only make a request to all the attendees that when the question answer session start, they should give their input so that we can further compile and approach to the government. Over to Mr. Paras Jain.
Yeah, good afternoon to all. Thank you, Pratik. You have extensively covered all the topics, all the points. I would have some few points. Before that, I just because I come from the industry, I know the pain through which we are passing through due to this COVID-19 effect. In fact, basically, there are two topmost issues before the industry. The first one is the liquidity, and second is the continuity of the business. So today also our efforts is how to ease that liquidity crunch issues, and in that respect, I have to add that the government has taken some measures to give relief to the taxpayers, but we feel that given the situation, the grave situation, these relief measures provided by the governments are just not enough, and requires some more or rather the huge efforts from the government side to provide the relief to the industries. The deferment of the GST payment has been allowed till the month of May. Payment for the month of May should be extended for the period till September 2020, and that should be on the 6 monthly basis, so that the payment which is due for the month of September may be paid in the month of March. Secondly, you see, in case of the industries, and it is our own experience, that large sums are stuck up in the various government schemes and the taxes, like drawback, ROCTLs, where the huge sums are pending just because there are no coordination between the ICE gate and the DGFT portal. Similarly, there are huge sums stuck up in the TUF subsidy and so on. So while we have been changing with the government to release all these pending funds, but seems that it takes time. It takes time. So the way out which we are suggesting to the government is that in case the government can extend bank loan without payment of interest equivalent to the sum which is appearing in the books of accounts. So to that extent, if the loan can be granted, and as soon as we receive the fund from the government, then can be set off against those loans. Similarly, like there is a rule 36(4) whereby the restriction has been put, whereby the ITC can be availed up to the 10% of the 100 plus 10% of the amount uploaded on the by the vendors, and this restriction has been done away with till June, should be extended till March 2021. That is, while the FTP has been extended as it is till 31st March 2021, there is one scheme, interest equalization scheme, whereby 3% interest subvention is given to the exporters, and that was for 5 years period till 31st March 2020, has not been extended. So our request would be from the government that this interest equalization scheme should also be extended for a further period of at least for 1 year. The issue of this interest on the gross amount versus the net amount is still there, because the notification from the government is still to come, should be expedited by the government to so that the department does not take the coercive.
I think there is some problem at Mr. Jain's end. Ritesh, would like to add any point before I move back to Rahul?
No, Pratik, I think most of it has been aptly covered. Just one is that it is important that government is conscious of the department action or enforcement, because this is the worst time after there would be a revenue pressure, and if officers start enforcing action against taxpayers, that would be a very difficult situation for taxpayers to either cope up with business or focus on the tax needs of the authorities. The point, we can move on to the topic.
Sure. Okay. Thanks a lot. So Rahul, with this, we'll give it back to you to cover the direct tax and the international tax portion. Thank you very much.
Thank you, and so thank you for being on time. And we would now, participants, take about 50 minutes to walk you through about 50 recommendations on direct taxes. So we have about 1 minute per recommendation to be discussed and imparted to you. But the short point that I earlier made, that we understand what the industry needs are, what the drivers of the businesses are. Keeping that in mind, as was mentioned earlier, if there are any other points that come to you, please do submit that. We would be very happy as SHM to take it to the government and also to the other stakeholders wherever needed. I would request my colleague, co-chair Rakesh Nangia, to take up the points number 1 and number 2, and then I'll request him to get ready for the points 13 and 14 to be taken up. Thank you, Rakesh.
Hello, can you unmute me? Yes. Hey, this is Rakesh Nangia, and I am the co-chairman of International Tax. Thank you for Rahul for giving me the mic. At the first foremost, I wish and I hope everybody, all the attendees, they're all safe, their family is safe, and you're following the law of the land. And if we cooperate with the government, we expect and hope that things comes back to normal as early as possible. So at the foremost, let's be a good corporate citizen and cooperate with the government. We get out of this disease, phase as early as possible. So what we are going to concentrate on something which is directly, which is a title, which is a COVID related. So basically all these things, issues have a direct bearing because of the tax exposures or tax burden likely to come because of the COVID intermittent issues. And hence our suggestion to the government is this, to look into them to elevate this challenge which the companies are likely to face because of the COVID situation and because of a very high immobility of the people and the businesses. So I will take you to some couple of them initially. Now, one of the changes which the government introduced in this year was Section 6, where the definition of a non-resident, which was a little bit of abusive provisions, where a non-resident was enjoying the situation of not paying taxes on the income earned outside the country because he was staying in India for less than 182 days. The government has reduced this threshold to 120 days. So government felt that a non-resident was enjoying this status and hence to curb that so the Indian income gets fully taxable for extended period. The government reduced the non-resident period from 182 days to 122 days. Now, what has happened is actually we are not going behind the logic why the government did it. The main is this: due to these circumstances, you will likely to be forced in the current year to stay in India for more than 120 days. The law is for 120 days. And this is, as I said it in my position, is because of the travel restrictions, which may force you not to move out of the house because of international travel completely suspended practically globally. So even you intended to stay outside the country, you cannot do that. So here we request, our suggestion to the government is this: we are not against the law. For 1920, there's a 1 month period which has forced you. 2021, give this relaxation for the time being, for at least for 3 months, 6 months. Those periods may be neutralized actually, or a certification by the non-resident will be taken as exempted. And we should restore and give this interim relief to the people who were non-resident, that they continue with their status. Next slide, Rahul, next slide, please. Yeah. Now, this is another important thing for all the foreign companies. And again, this happens only because when the people cannot move out of the country and they were forced to stay in India because of the COVID actually. And one of the clauses which are there in the treaties where the employee, if they stay in India beyond a certain threshold, you trigger a service PE of the foreign entity in India. Now, again, you have the same problem here. First of all, the OECD Secretariat, at the request of a lot of the countries, have issued a guidance report because the COVID is a global issue, that the residential status of the companies should not be affected basically because of this. So if you have been abstained or not been able to travel or go back home and you wanted to go back home, and on the basis of certain criteria, could be, which I said in the previous slide, so you should not be made to force to trigger a service PE, and your income to that extent gets taxable where intent was not there because of COVID related. Now, another interesting part, the second leg of this slide, this is the provision of point of effective management. And this came in 2017 actually, and this was intended where a lot of companies were floated outside the country, you were earning income outside the country, and you were not paying the taxes, you were controlling those companies from India, your effective management was located in India, and hence government introduced that such corporates will pay taxes in India and you will create a P in India for such companies, since your effective management in India. And one of the criteria was there where your key personnel could be located, have to director meeting should be held outside the country. Your the key person should be located outside the country to avoid these provisions. This is documented as per the law. Now, our request to the government is this: where these key provisions could not move out of the country to hold the board meeting or to take the key decisions because of COVID-related restrictions, and they're stuck up in India, so because of this lockdown, these provisions of POEM should not be triggered. Otherwise, their income unnecessarily will get taxed in India, where the intention was never there. So we are requesting a suggestion to the government. Both these clauses, triggering a service fee and a POEM, we must give a leeway where there was a cases where there was a forced stay in India and because of COVID and travel restrictions. Rahul, I take this back to you now. I'll come in on 13 now. I'll come back on 13.
Thank you. And I would move a little faster
I'm sorry.
because we have some time. And I would say that some of these are very obvious, and therefore we would not spend any more time on this. And this item number 3 covers the request that we should extend the date for filing, which is the statutory filing date for both the individual tax return as well as for tax audit as well as for the corporate tax return. And in view of this situation, we are expecting that this should be assisted with by the government. The next point also is an important aspect, that due to the economic slowdown and also related cash flow issue and suspension of the banking loan system, etc., there is unsold inventory which is piled up with the real estate players. And the request here is that due to this unprecedented situation, please do not tax the notional rent from unsold inventory for the year under question at all. And similar situation also is arising, as you would have seen in newspapers, etc., that lots of tenants have taken a position that they would not pay rent. And under our system, when the income tax recognizes the annual letting out value as the taxable base for income, it's requested that we must deviate from that to the extent that it should not require people to pay taxes on the notional value unless the rent is actually received. And in case it is not received or it is deferred, the taxation on the income should also stand deferred until the time it is actually received. The same situation also arises in relation to salary. There are many companies and there are many employers who are requesting their employees that to get over with this situation, a class of employees or all of employees must either defer their salary or take a cut in the salary or take a temporary cut in the salary. In all such situations, it is requested that the proviso should be added to the definition of salary, that it doesn't become taxable only on the basis because you have a contract of employment. It should actually be taxed only when it is actually liable to be received and not contingent upon the activity and not contingent upon the aspect whether situation develops it or not. What also is happening is that because there is a requirement, and also rightly so from a civil society point of view, that there should not be any retrenchment or there should not be any job losses, given that the employers are acting and they are providing lots of support and facility to various classes of employees that work for them. And it is requested that in particularly the COVID situation, whatever support the employers or former employers are providing to their employees, that should not be taxed in the general definition of perquisites, and it should be considered as a support on a humanitarian ground and not liable to tax as a result of your service or employment as an earning from the employment or income. The next point also is very important, that a lot of us have the stay of demand situations which today cannot be dealt with because either the courts or the tribunals or the authorities are not functioning or you cannot access them, and therefore it is requested that all the cases where the demand is payable under this request, we are saying until September 20th, no recovery of tax demand should be made, and thereafter, depending on how the economic situation turns, you may prescribe the or give the option to the taxpayer to pay it in the installments. The other aspect which is equally important is that where the stay orders are expiring during this period, it should automatically be extended till 30th September, and keeping in the dynamic situation be revisited then whether it needs to be further extended. In relation to the appeals, to CIT appeals, there is a compulsory payment or the required payment of 20% before filing or lodging of the appeal. It is requested that it should be either dispensed with or at least be reduced to half, which is 10%. Similarly, when we go to the requirement for payment of taxes under the TDS provisions or Chapter 17B, we find that any delay in tax payments results in payment of interest, and there is a reduction in the rate at which the interest is to be paid. It is requested that at least till the period where there is compulsory lockdown, there shouldn't be any interest, and for the period when there is compulsory lockdown, there is no interest, and until the time the taxpayer is actually able to pay, the reduced rate of interest should apply from the date of deduction of the tax. The advance tax payment, which is becoming due soon after on the 15th of June, it is requested that as a matter of gesture to make sure that the liquidity is not hit, people continue to pay salaries to the employees even when the employees are idle and no work is happening and no revenue is being generated from factories, etc. And to support that, it's requested that the advance tax first installment could be dispensed with altogether, and thereby proportionately in the second, third, and fourth installment before 31st March, the advance tax payment should be allowed without attracting any penal consequences of interest in regard to this. The next question is equally important, as was pointed out by the earlier speaker, that in relation to the enforcement or in relation to the scrutiny or the audits of the cases, it is important that the audits of the cases are taken up having regard to the fact that this is the year where the forecast or the business as usual econometric analysis for finding where the cases or the risk parameter is high would not apply. And therefore, if a filter is used that if the turnover is down by 20%, you must select the case necessarily for scrutiny, etc., those parameters would not apply, and therefore it is requested here that the scrutiny should be done in a very limited fashion, particularly for businesses, and only applying the algorithm or the criteria which is actually reasonably moderated, modified, and amended having regard to the economic situation, and not just a comparison of the past year as it used to happen in business as usual. I would request quickly, Rakesh, again for you to take up point number 13 and 14 regarding equalization levy and the exports.
Friends, now equalization levy is a new tax which has been levied by Finance Act 2020. Surprisingly, it was not there when the bill was introduced. And in the month of March, this was introduced. And since it's a new law, we have come, there's a lot of challenges. The list is very long, but briefly, I'll just touch it like this. Is a 2% levy which has been levied on the e-commerce operators and who are providing e-commerce services also. And that too, they have to be a first non-resident. So any shopping which is being done on, say, Amazon UK, USA, or international sites, and using an Indian IP address, 2% taxes will be payable by the non-resident operator. The challenge which is coming here, they use the word services. What happens to the service like software being loaded? What happens when you download the music channel? What happens you download so many day-to-day software related to that? They will be subject to challenges or not? Biggest challenge which I find when you going to do a hospitality booking using international reservation systems, will it be payable or will it not be payable, or it will be payable on what amount it will be payable? Similarly, when you do the airline booking, you have a serious challenge when an airline booking, if you do a ticket of 2 lakhs rupees, can you pay a 2% charges on such a high amount and seeing the underlying element of profit in it? Answer is no. This still does not clearly answer the situation there. And we believe an equalization levy of 2% opens a humongous door of litigation, and especially I tell you cases where you may be paying a tax, like you may be paying a royalty on software. Yes, 2% is available on those cases, or it is not available. Still not fully answered in this case is concerned. And last, which is Pandora box for all the companies, what happened to the intercompany charges which are being digitally being given, will they come, and which may be claimed to be non-taxable, will they come under taxable under the equalization levy? So this is a complete, a massive Pandora box, massive issues, and I've just touched briefly on them. When you go deeply, this will be a complete separate chapter to go to the government to relook into that. We are not going beyond the intent of the government to do that, but we want more clarity, no litigation, no subjectivity on that. Rahul, next slide. I think one of the things which is there on the export part, I just to tell you, we all know that, and all the members must be knowing it, attendees here, that exports have been terribly been affected. Exporters have been terribly affected, and the shipments have been delayed indefinitely, and the goods have been rejected, order has been cancelled, goods in process have been suspended, factories have been closed, goods stuck at the ports. The list is endless. The woes and the pain to the exporter because of COVID, I think, is highly there, highly humongously bad. And today news in the morning was there, your export to the extent only when the COVID was there, the latter part of March, now 35% or 40% exports have gone down in the month of March. Imagine what will be the April situation. So my request is this, there should be a clear passage, like what happened to obsolescence? There should be clear law. Obsolescence will be allowed, clear exemption write-off. It should not be subject to the discretion of the tax officer of this question or that question and 100 questions. No, I don't agree on that. So the government must come back to give a relief like obsolescence, right, bad debts basically, and even and same consequential where they are going to pay, have a pain in the tax assessments, and a tax relief needs to be given to them, and some added deduction may be offered to the exporters. I leave on the decision of the government, but they do need relief in this sector. Exporters, I believe, are very badly hurt and needs to be looked after by the government. Yes, Rahul.
Thank you.
Rahul,
and thank you. And participants, coming back to few other items in the spirit that we said, what are the drivers? And we do see that lots of people are doing very good work of contribution to various funds, etc. And in light of this, the request here from SHM is that first, the expenses incurred on CSR, and which most of the organizations we have seen are diverting their CSR expenses to deal with the COVID related situation. And in view of this, it should be an allowable deduction, unlike the earlier position that the government as a policy took, that the CSR expenses should not be allowed as a deductible expenditure. The second is the aspect in relation to the payments made under section 80G as donation. And in relation to the 80G sections, there are two things which are recommended here. One, that payments made in kind should also classify and qualify for deduction. And number two, that the payments made where there is a deduction cap of 10% of gross total income, that should not apply. And the third aspect to this is that even when the special lower rate of the taxes apply, it should be allowed that the 80G further reduces the taxable base, and you should not necessarily debar the deduction of 80G in this situation from those cases which fall under section 115 BAA or BAB. The next item, which is equally important, is if you look at the item number 18, 19, now I will request Mr. Nangia to take up the 19, but quickly take up the item number 18, which is very important, that under this current situation, lots of organizations, the civil society organizations, the religious organizations, the government fund and non-funded agencies are giving support to individuals and businesses, and it is requested that under section 56, which brings to tax any money received up to 50,000 rupees only is the exemption, that should not apply when any money is received or any benefit is received by individuals from any source, whether from relative or non-relative, in relation to the current situation as a distress support or as a support for medical expenses or a support for family support of any kind, whether the money received by individual or businesses, should not be made liable to tax. Otherwise, it will defeat the purpose of the giver of the support to support that family to come out of distress. I would request Mr. Nangia to take up point number 19 and maybe 23, both of them together.
Okay, this is one expectation from the government. Like one is India manufacturing part, we all know has been substantially going down. And today what we see in the news where the likelihood of manufacturing globally shifting to India, especially from China, which was the news sometime back, including last week, where the Japanese people have given certain fund for that. So I think one of the recommendations we want to do with the government to take this opportunity of setting up some new fast track like coastal export zones. And here basically that is something like SEZ, but basically attract the investment, attract the immediately and the voice of the government in terms of increasing the manufacturing, giving an employment actually, making is one of the most friendly zone comparatively globally. This can come out to be one of the best opportunity for the country, basically to fast track, give incentive. I'm not coming to the incentive, give a lower tax because the advantage that will flow to the country will be much more than the small tax saving is concerned. So tax is concerned. So my expectation from the government is please come forward and give such relief, fast track these coastal zones for the manufacturing is concerned. On 23rd, which is a release of refund, we do see the government releasing refunds where the amount is less than 5 lakhs rupees. My request to the government is this: there are actually people who have high refunds. I think this is not the recourse. We have to go to the court and get a direction to the court. We request government to look, because it is a serious liquidity crunch. Please come forward, and where the cases have been fructified, assessment has been completed, where the refunds were held up because of last 2-3 months time, the government must release refunds without any limit is concerned to ease the liquidity pain of the companies are there. Rahul, back to you.
Thank you. And as we said earlier, that the unprecedented situation also is requiring significant help from the business in medicine to develop the medicine against COVID-19. We don't know what the business case for such development effort is, and therefore to make sure that the businesses do not feel that there isn't a good enough business case, because we don't know how long would it stay and what would be the efficacy of medicine for any other purpose. There should be a deduction, which is the R&D deduction at a weighted rate, to be provided for any expenditure incurred in developing the medication or vaccine against the COVID-19. Now, similarly, when we go to the aspect of creating the capacity, and in the capacity creation, there are 3 things that are happening. One, the current businesses are looking at the models that look, our current business in the new world may not fit, because people have experienced now the world of digital, and therefore we need to change the infrastructure. We need to create a new infrastructure, and therefore to the businesses, and particularly the digital infrastructure businesses, the request here is that the additional deduction should be allowed of capex, because that is morphing the business to suit the new conditions and to kickstart the new economic activities. Similarly, in relation to the creation of the medical facilities, and it was very apparent that we needed medical facilities many more in terms of quantity and quality both, and therefore the medical deduction in respect of new hospitals, which is limited to 100 beds plus hospital, that should be extended to even 25 beds per hospital, so that the deduction is allowed to companies which are promoting, even at the district or sub-district level, the facilities of the hospitals of 25 beds. Similarly, the drugs or the essential commodity manufacturers in the medical and paramedical field should be allowed a weighted deduction in respect of the capex that they incur, so that is one, an industry which grows, and second, the deficit in the capacity that is so apparent gets filled fast enough in this regard, without people having to bother that whether or not it is a long-term business, because lots of people would find that it is good to repurpose their factories, facilities, infrastructure, people, resources to do this rather than doing something else. And in this transition, the capex that is incurred, if that is funded partly through the weighted deduction, it would catalyze that and it would help the situation that we are dealing with. Moving to the next item, like Rakesh mentioned, that in respect of the refund, it is requested that the processing of all refunds must be expedited so that the money of the businesses comes back to them to get over the situation of liquidity crunch and to make sure that they're able to continue to disburse the salaries, they're able to continue to disburse the payments to the vendor and the small players, and also to the property rent, etc. And if there is no disruption in that, at least the economic cycle doesn't get disturbed. And it's very important, therefore, we should continue to get the money belonging to the business back to business without having to follow any other processes. Moving to the item number 24, the TDS due dates, as we know, is every month you need to pay TDS, and here it is requested that if without interest the TDS due date can be deferred, and due date deferment without interest itself would provide a liquidity to the people. We already have a stringent law that in case it is not followed, tax after collection, it entails even the prosecution to the people, and therefore there is more than enough safeguard, and the risk is relatively very low that such a deferment would lead to a situation of non-payment of taxes. Therefore, the recommendation here is that such payments which are due every month may be deferred. Currently, our recommendation is until June 2020, and depending on dynamic situations, one can review that. In relation to the small businesses, and particularly the businesses maybe less than 50 crores, when you look at their compliance requirements, the direct tax, indirect tax, TDS, the host of compliances that they do, and here the requirement is that, request here and recommendation here is that can we look at the single tax regime on some rough and ready basis based on the value addition that businesses do and various sectors of the businesses entail, and particularly in this situation of the depressed economic outlook, a consolidated tax can be worked out for direct tax, indirect tax, TDS, all liabilities for businesses below a certain class, and based on that the businesses could be given an option, just follow that and pay that tax over 2-3 installments, and that's the end of it. You don't need to do anything else. The division between center and state and direct and indirect taxes can be taken care by the government at the back end, and you don't need to worry about that. The issue here was raised that what happens to the tax credit. Similarly, on basis of such algorithm that is worked out, the tax credit can also be worked out based on a basis of typical value addition and typical tax which is counted as average rate of tax in relation to such small businesses. So it doesn't need to necessarily disturb or break the chain of the GST credit. That should continue, even though it may continue it based on some notional basis of calculation and derived amount rather than the actual amount. In relation to the fact that the companies continue to employ people, and we all are looking at this situation resulting in enormous job loss, there are two suggestions here. That one, that the 25,000 rupees cap which is there in weighted deduction under section 80JJ should get increased to 35,000 at least, and the rate of deduction should go on a weighted basis from 40% to 50% for any additional employee during this year. The retained workforce, on the other hand, if you are able to show clearly that despite COVID breakdown, despite the businesses going down, you were able to retain the employees compared to the last situation and 31st March 2020 and July 2020, if you're able to show that, the recommendation here is that 150% weighted deduction should be allowed for that salary paid for those employees whom you continue to retain on basis despite there being idle or despite there being no business at all. The Deme Dividend thing, which we all know that when multiple entities in the group transfer the money to one another, there are various situations where under the tax laws it could result in a Deme Dividend to an entity which is receiving the money, despite the fact that as a matter of transaction it's a loan or an advance. It's requested that under the current liquidity crisis situations, the businesses and the companies and the group companies may be allowed a greater flexibility to exchange the money between each other to overcome this difficulty of the liquidity without attracting any provisions of the Deme Dividend, and therefore the Deme Dividend provisions for this period may be suspended in relation to the transactions between the group entities. The SEZs are expiring. The SEZs are expiring 31st March 2020. As we all see, it's requested that in this situation it should be extended by at least 1 more year. And the fact that new manufacturing facilities, etc., in the backward district or the notified district or the highly affected district, we should consider investment allowance to prompt businesses to make investment when they see the new green shoots in the economy coming up in the coming months and years. For small and medium enterprises, just like the flat rate of tax of 15%, it's requested that this flat rate of tax of 15% should be applied to all small and medium enterprises which do not fall in our recommendation of the first part which we made, that there should be only one tax. So while you calculate what is that one tax, the income tax rate on that should be considered as no more than 15% rate of tax on such companies. What is also happening is that the large companies and small companies ecosystem, when you look at it, the large companies are supporting their vendors, and the smaller vendors, which are SMEs and which are employing a smaller number of people or people at a different grassroots level, and such a support when is extended by the larger companies to smaller companies who are their vendors or are their suppliers, it's requested that such support should be considered as a regular business expenditure, and any amount spent on that should not be challenged for the purpose of the business, whether or not it is as a transaction of purchase or service, or it is a transaction of support given to those people on a non-refundable basis. Moving on, if you look at the expenses, that if you look at the tax concessions for individuals, a lot of individuals have incurred large expenses in relation to the hospitalization or testing or quarantining themselves into the COVID situation, and such expenditure incurred should qualify as a deduction from the individual's salary or other income under Section 80D. The stress sector, which are actually finding much more difficulty than the others, it is important that the business loss incurred for this year should be allowed to be carried forward indefinitely, so that the revival, if it is delayed because those businesses are not able to come up in this situation, they shouldn't lose this loss, because it is an economic loss in any case. The tax relief in relation to ATC payments, which is allowed, should be allowed on an accrual basis. Currently it is actually on payment basis, and as we said earlier, the liquidity crisis is all over, including the business and individuals. And individuals, if they are deferring their installments because of the resetting of the loan, etc., done with the bankers, they should continue to get their deduction under Section 80C, and of course it should get only one and not twice over. Otherwise they would be at a disadvantage in terms of suddenly finding a higher rate of tax coming as a TDS, further creating the stress to them. In relation to the scheme which the government has launched for Vivad Se Vishwas, it is already extending the time limit for applications under the scheme till 30th June. Given the situation that up till 30th June also business as usual is far from reality, it's requested that the scheme and payment of taxes under the scheme should be extended till December 2020, or at least the payment of tax should be allowed till December 2020 in this regard. Also, it's important that in relation to the scheme where the tax percentage is 100% to be paid, the government may consider that if it is appropriate, at least in the class of cases where the tax matters are pending in appeal and where the tax matters typically are lost by the tax department, just like the 50% rate, those must shift from 100% to 50% rate. In relation to loss under the house property, into the next section, if you find that it is restricted to be allowed against the other income, and it is important that it should be allowed to be set off against the other income, and also the limit in respect of any rent deduction, as I said earlier, should be considered in light of the fact whether the rent is actually received or not, and not only on the annual let out value. In relation of the carry forward business loss, which is incurred particularly in this year when the COVID is happening, it should get extended period for set off because you're unsure whether or not it would get offset within the economic revival being fast enough or not. The next point is equally important in point number 39, that when the support is received by the businesses, or point number 40, by the individuals, whether a support for distress or a support for job loss or a support for order cancel or a support for business support from trust or the government or other agencies, such support under this situation should be considered as a capital receipt and not brought to tax. Otherwise it would lose its meaning to make that industry survive or take full advantage of such support. Equally important is the aspect that the giver of the support, and typically here when you look at the employees, lots of companies are working with the employees to give them a package that, look, it is not a situation of a job loss or retrenchment, it's a situation of giving you a one-time lump sum money where you can do your own self-employment, you can avail of other opportunities, and also at the same time make the business viable. And in those situations, the employees, any welfare funds created or the contribution made to the trust for the employees by the employer should be allowed as a full deduction without having to go through the approval process or recognition process, which is making one, it contingent, and second, unsure whether or not such deduction should be allowed or would be allowed. This would encourage both the employees as well as employer, because it's not taxable in the hands of the employees, and if it is deductible in the hands of the employer, it would actually put money to the needy and help revive the situation for the most needed person. In terms of the salaries which are paid by the people who employ the household people, so salary income has no deductions of expenses. Here the recommendation from the chamber is that the salaried employees also, when they employ the household, they employ the gardener, or they employ the guards, or they employ the maids, or they employ the sweepers or cleaners or drivers with them, in that case the salaries paid to those people during the period when there was a complete lockdown, when there was idle period, the salaries paid by the salaried people to those people should also be allowed as a deductible expenditure against the salary. This would, one, encourage people to do so, and secondly, it would encourage the continuity of livelihood of those people who are working with salaried people and not necessarily part of the business. With this, I would hand over to cover in next about 12-13 minutes the transfer pricing, and with us are joining Milind Kothari. Milind, over to you, please. Thank you.
Thank you, Rahul, and thank you, Rakesh, for the preface of introduction of direct tax subject. And Rakesh, I echo your sentiment of being a great corporate citizen, that each of us need to bring out our best so that we can all tide over these difficult times together. And very good thoughts on how we should remain safe as much as remain within the lockdown period within our confines of our homes. Thanks, everyone. And I'll go into the transfer pricing subjects, and there are quite a few things which are there. But at the outset, let me set the tone for the transfer pricing changes that are being proposed in this document. And essentially, I think that one of the most important things that we need to realize is the difficult times that we are into, and therefore the entire transfer pricing, that is the global trade, is going to go for such a transformation that we have not anticipated or understood at this point of time. And I'm hoping that the laws would align to the business requirement in these difficult times, and the tax authorities also realized that there has to be a flexibility over here in the interpretation of transfer pricing regulations and make those changes as well wherever required, so that the difficulties of the taxpayers are alleviated in this process. Now, let me take you through some of the specific problems that we would envisage in this current year. And to begin, of course, is the comparability analysis, which is the biggest pain point that we would possibly see. And here we need comparability adjustments guidelines to be there, to be released as early as possible. That is something that we must get as soon as possible. We cannot rely on the last 3 years data because that is not representative of what is happening in the world today. So therefore, clear guidance on adjustments would be very helpful to us. The next is relaxation of compliance timeline from 30th November to 31st March again, because the data would not be available by then is what we would expect by 30th November. So that's going to be the next challenge that we need to be able to overcome. ALP justification, there are going to be low profits or losses on account of RPD, not on account of RPD that could be there. So that the relaxation of the range of comparables percentile, that is 35 to 65, should get relaxed between 25 to 75. That's something that is we should be able to bring forward for the taxpayers. The tolerance band also likewise should be extended to plus or minus 5% for FY 1920, if that is, or maybe higher also, if that's something we could conceive. Now let's look at the impact on the limited risk entities also. Given the situation, there are going to be lower product and service delivery to their own clients. So there are going to be reduced orders from the associated enterprise as well. And overall lower utilization of resources, also temporary or permanent reduction of business. So there are going to be many challenges in this particular domain as well in terms of limited risk entities. And therefore, again, there has to be a method in which we are able to alleviate those challenges as well by having to recalibrate the risk profiles and not to be treated in this regard. The next one is the revision of termination of agreements with the A, very likely to happen because of shutdown of plants. Also, a lot of companies may want to use the clause of force measure, and there is a change in risk characterization that is possible for such shutdowns. And the issue is that could this be called as business restructuring or not? The answer is not. This should not be treated as international transactions because these are exceptional events, and therefore we need to have provisions of law which support that these kind of situations will not be taken as business restructuring and adjustment being made for that. Next one is the secondary adjustments, which is also something that is going to be a challenge. And obviously the world is awakened to a new reality that there is going to be significant liquidity challenges. And for us to be able to realize payments within the 90 days is not going to be possible. And therefore, additional time needs to be provided for repatriation of monies so that secondary adjustments are not triggered for FY 1920 and 2021. 2 years will be impacted in the process. Lastly, safe harbors again need to be notified for 1920 and 2021 so that there is a rationalization of the situation in terms of the economic meltdown that is happening globally. Also, safe harbors to be provided for more transactions than what already the coverage is, so that the benefit is given to more taxpayers with a certainty of how tax will be levied in India on this particular subject. Lastly, of course, there are some practical difficulties at which I wanted to highlight. The TP assessments are likely to be or supposed to be closed on 31st of July 2020. It's only that we would possibly be able to resume our operations somewhere in the month of May. There is not going to be enough timeline available for us to complete the TP assessments. So that also should be relaxed so that taxpayers get more time to be able to bring forward the factual documentation in front of the transfer pricing officers. Lastly, the APA would also need to be looked into again. There is going to be a breach of critical assumptions which could result into APA termination. These need to be relaxed again because these are the situations that would unfold in this particular year, and we need to be cognizant of that. Which brings me to a very important aspect is that what is can we look at 1920 and 2021 as 2 years in which transfer pricing can take a backseat because the whole world is going to recalibrate in how business is going to get done. Are we looking at margins on a cost plus at this point of time, or are we wanting to retain jobs in India? We need to take some large calls over here, and therefore I think possibly transfer pricing should take a backseat in terms of being a regulatory driven issue, where we now need to look at the larger perspective and the economic benefit that the country will want to look at in this particular year is to be able to get back foreign investment. Rakesh, you mentioned about Japanese companies looking at investing in India, given that China, they may not want to look at. And of course, the government of Japan is itself encouraging investments to be done outside of Japan, outside of China. And that being the case, India should be able to be ready to be able to have those regulations which will attract investments in India. And you, of course, you covered quite a few of those. But I think more importantly, transfer pricing also need to complement that sentiment that India is ready to do business and able to bring back jobs, which is going to be such a problem for Indian economy going forward. I think with these comments, I'll hand it over back to Rahul. I think we are eating into the question answer time. So if anything that the participants want to ask on the subjects that all of us have covered, we should be able to welcome those. Thanks, Rahul.
Welcome. So we have 5 more minutes before we begin the question answer session, and we have from industry Paras. Paras, would you like to say something on the direct taxes as well, please? 5 minutes to you.
Sorry, I don't deal with the direct taxes, but I just like to mention one point, that the continuity of business in this regard, what we have done. So I just sharing our experience that we have got the large industrial plants at in Gujarat as well as the elsewhere in the country. So in Gujarat, 2 days back, we resumed the production with the whatever that labor available locally, and with all kind of permissions we got from the district authorities and the state government, and with the cooperation of all the concerned, we could resume our production. No, may not be fully, but yes, we have partially started the production, because you see the economic must go on, that the wheels must go on. So with that perspective, if the industries are producing, then we can reduce the impact of the pandemic. So that has been our experience.
Ritesh, anything you want to add to direct tax, please?
Nothing in particular. Though I'm intrigued by the suggestion of merging direct and indirect tax for small entities. Really need to see how this pans out.
So anybody else who wants to add? We have 3 more minutes before we plunge into question answer. Over to you, Rakesh.
I have one small suggestion here, and it's a little radical. It's important. The scheme VSVS scheme actually does not cater into cases. I found in foreign companies, if you see the maximum litigation that is there, it is a permanent establishment. So, but at the same time, the type of the orders that has been done by in either case, expectation from both sides of the table are too wide extreme. I may not accept the position what the government has taken it, and government may not accept my position. So I was looking, the government can bring some safe harbor, private PE attribution guidelines where such companies can also jump in and take advantage of VSVS scheme. So you'll find it will actually be a win-win situation for any and everybody, for the government. Substantial litigation going on. It is obviously not binding on the new cases, and a lot of people, government will get a lot of taxes, because though the permanent establishment litigation we know can continue for 10 years, 15 years to the Supreme Court. So some sort of a safe harbor rule coming up by the guidance of the government. If you're in this range of private attribution of PE, take a VSVS scheme, which does not cater, the existing scheme does not cater. It will be a big boost to the sentiment of the foreign companies to end the litigation in India.
Thank you so much for this additional suggestion on the VSP scheme. And may I request the IT people who are supporting this event to invite the questions from the audience, and then would request the panelists to deal with those questions.
So the audience, the attendees can write in this question box their questions.
So are you able to see any questions, Rakesh?
No, I don't see anything coming to me, and I'm trying to to me. I don't see anything coming on either side of any part. Avinash, can you check with the
Mr. Rahul, if no question has come so far, let me initiate, one discussion. As we
Yes.
have discussed our recommendation, we should inform to the all attendees by what time, our recommendation will, are you not able to hear?
We can.
Yes. What Mr. Rahul, I am saying, so we should tell to the attendees our recommendation, quite wide. Whether and by what date we are able to contact to the government, and we should ask to the government they should give their reaction at the earliest possible, because this is not the yearly affair we recommending for the pre-budget and we wait for the budget, etc. The time is very short. It should be like 24/7 circle. So, when we are supposed to get the reaction from the government?
Rahul sir, this is Harinder.
Surrender.
So you can view all the questions in the right side panel. There is a question box.
Can't see the question box, so if somebody can
read it for us.
I think the moderator is Rahul sir, so I think he can see the questions.
See the question. If you want to assist me in seeing the question, I'm happy to follow the guidance. I can see now the 6 tiles showing the faces and video of 6 panelists on my screen.
Yes, questions are not coming up. We can't see anything on the screen, the questions.
Maybe anything left incomplete we can share with the attendees, with the audience. Maybe we can talk on any generic thing, around something, bounce back. I can bounce a little bit on equalization levy if you permit me.
So let's just sort out if there are questions already, and then we would do the conversation on equalization.
If you can make me the presenter, maybe I can just figure out.
Because my box is clear, there's no question. I can see the box, but there's no question here. There were some questions. Webinar was going on.
Any questions or not? They can read it out. If IT people can read it out, then we can react to that.
See, there were certain questions that the webinar was going on. There were 4 questions, but there's nothing more than that after that.
But look, I want to type the question, but I'm not able to type. It is not allowing me to type the questions.
Paras, you can speak. You can
the question.
You can start the question. You're on the mic.
No, that's all. But I think is it the difficulty all are facing, so that they are not able to raise this question. So just to check.
Okay.
So my question is that when is the likely the government going to announce the measures for the industries? We have been waiting for a long. Is there any indication for that?
Same question I put to Mr. Rahul.
Rahul, you debated. I'll add on. You continue. I'll add on.
Because you see, the governments of US, Europe, Japan have declared relief by way of trillions of dollars. And in India, it was a meager 1.7 billion, which is also not directly to the industries. In fact, we have been waiting that government will come out in a big way. Yeah, even the president was mentioning that something around 17 lakh crore, something should the government come out with the kind of relief. Yes, we have also to look that where the government will bring that money, where the money will come to the government. That is also we should think, but in this extraordinary situation, the government has to take the extraordinary measures also to collect the money. Maybe various, yeah.
Okay, Rahul, I have a permission to have your permission.
I can see the questions, and I would take those questions to people now. And there is a question from Gopal Goyal regarding indirect taxes, which says whether any clarification regarding credit blocked by department sumoto is expected.
I think that yes. No,
yeah,
I think,
Prateek, if you can.
Sure. I don't think any clarification has come out as of now, but I know that government, I mean, we have taken this as other forums as well. Those companies where it has got stuck, they have also represented to the government. I'm expecting that clarification to come soon and to keep that blockage in abeyance. But as of now, I don't think any clarification has come.
JK, this is a question to you in particular. With a good evening, Mr. Sir. My question was regarding GST return to waive late fee from last year.
In fact, this is the government has to take a decision. We are recommending it. Some decision was taken. Every time their government is extending the date of returns, and the late fees has been waived on many occasions, and this also some late fees. But if any particular event which late fees, they can suggest us so that we from the system can recommend it.
The next question is what about the monthly payment, monthly return filing?
Can you repeat this? Can you repeat, please? So voice was breaking. Can you repeat, please?
What about the return filing on monthly taxpayers? The question from Peter Goyal. Is there any relaxation in return filing on monthly taxpayers? Is there any relaxation in return filing for monthly taxpayers? This is a question from
Ritesh can maybe answer that. I think I see him raising his hand. Yes, Ritesh.
Yeah, so the government has already given a relaxation by delayed filing of return till 30th June. So for monthly taxpayers, I think the due date is 24th June. And what Mr. Mittal was saying about late filing, again, there is a relaxation up to 30th June. So if you go beyond 30th June, then late filing comes into play. But until 30th June, and for large taxpayer monthly return, it is 24th June. Those relaxations are in place. Let's see if there is any further relaxation which is provided depending upon the situation.
I would just like to add here is that while you don't file the returns, etc., effectively for larger businesses who don't want to pay 9% interest, they will file the return, and because unless you file the return, your amount is not getting appropriated, right? So they will file the return and they'll pay. So effectively, this relaxation would be for smaller businesses where they don't have any interest implication. Otherwise, the larger companies who want to pay tax will first file the return and then pay tax. So just a quick clarification on that.
There is a question from Hirav Shah saying that is there a representation to take power industry into GST regime?
Well, I mean, I think as industry bodies, and I'm sure that on behalf of SOCHAM also, we have represented earlier, but we believe that this may not be the right time for the government to take this up, because this will require a greater deliberation with states and greater consensus building. So we have not made a fresh recommendation for those recommendations were made earlier. As of now, we are focusing on what are the recommendations which could bring in quick relief in view of the COVID situation. Of course, the long-term recommendation that we have is the real estate and as well as power and petroleum products. Everything should be brought under GST, but not as of now.
This is question directed to JK from Sunil Chaudhary. Due to COVID-19, can government, when it is not receiving taxes, compulsorily acquire religious funds like Balaji Temple, Shridi Temple, Padmanabham Temple, and things like that?
The government can always, take a decisions. It is up to the government, but to touch the religious sentiments, at one particular religion and not the others. In country like us, it would be a quite risky proposition. I think so. It would be more, beneficial if the person voluntarily, all organization and religious trust come forward. And I think so. Many has come forward, and huge contribution has been given to the PM Care Fund, and each individual is contributing. So we do not know the, to what extent the contribution, will come from such trust. But that is a interesting things, because after all, why we collect the money? If we all will survive, then only we can use it. So the situation is now so grave that the people is, looking forward for the good life rather than the keeping the good money with them.
Any further questions, Rahul? Can't hear you. Okay.
I'm trying to navigate the questions because there was a small screen which I scrolled fully.
Oh.
Now I'm trying to see if there is other part of it. But in the meantime, if you have a point of view, please continue. I will mute myself and try to go back to the screen and scroll it further.
Okay. So I will come back to Parasji, what you said about government help coming out to that. Let me tell you, there are only 4 countries in the world which have come in a very big way. US has come 11% of the GDP. Canada has come 8% of the GDP. Germany has come 5% of the GDP in terms of that. Now, majority of the company, like India, spent 0.84% of GDP. So India does not have a fiscal space, so much of fiscal space at all. And they will definitely come, and they have yet come only for the lower strata of the business, and for the upper status of the businesses which can afford it. Government will be only going to give you temporary relief, and they are not going to give you a big bumper relief coming up. They'll give you procedure relief, they'll give you interest relief, but they're not going to give any money in your pocket, like bigger countries have done it. Countries have given salaries to the extent of 80%. Like UK, US, Germany, they have given 80% salary. Japan has introduced a $1 trillion COVID relief, US $2.4 trillion. And Indian economy is 2.7, 2.8 trillion today. So India is just India. I think India does not have money, does not have fiscal space to do that, except to touch the lower strata, which is more required to be done, socially, which is required to be done. And they have come with a couple of them. Yes, expectations for smaller businesses more important today and very badly required. I can tell you that.
Yeah, I agree with that. But the kind of situation is there where even that government has to think out of box, where from the money can come to provide the relief to all concerned, particularly the industries. So like Indonesia has done in 2016, whereby it came with the scheme of that unearthing the black money which is lying outside abroad, and very attractive scheme whereby very low taxes were kept. So that is one. The second could be like, as per the World Gold Council, India has about 25,000 metric tons of gold, and this issue of gold bonds targeted towards the higher middle group and the religious, the amount can be garnered here. Similarly, like issue of sovereign bonds in 2019, in the budget, with the global interest rate now close to zero. Now again we can think of issuing the sovereign bonds. This is the right time. And the last one suggestions could be like in 2013, where the Raghuram Rajan, the RBI governor, came out with a very attractive scheme for the NRIs, where the dollar deposit scheme was announced. And in a very short span of time, about $30 billion have been mopped up. So these are some thoughts that how the government has to like take some kind of this innovative approaches to gather the money, because you see bio divestment which the government has already proposed in the budget, it will be very difficult now in the given scenario whereby we are thinking of this LIC equity issue and the sale of the other assets, may be very difficult proposals in coming forward. So the government has to think some very innovatively and out of box approach.
I can only add.
Ritesh, I have made you the presenter. See if you can scroll through the screen of the questions and bring them up.
Even I'm not able to trace.
Okay. So can we, Regular, can you tell us how to go to the window?
Sir, I think, sir, we can inform the attendees and they can send their questions to us at our email. Okay, that will help us to compile the further recommendations.
I have a question I can see from Harshita. And she writes, I run a paying guest. Bill refuted. So this is to indirect tax team.
Sorry, could you repeat the question again?
I think your phone is booted. Yeah, you can't hear.
It's refuted. That's I'm reading quote unquote. Will the commercial electricity bill refuted?
What is this question? We can't understand.
Can you hear me?
Commercial electricity bill refuted?
This is a question. I'm reading it. Will the commercial electricity bill refuted? I think she's trying to say that, can I say this is not a commercial electricity bill? Because she's running a paying guest.
Yeah, I think I think the question is not clear. Maybe there is some. I think the question is that will the government or electricity board waive off the electricity charges? I think maybe that is the question. Of course, that at this point in time is not clear, but it doesn't look like a tax question to me.
Yes, I have another question, which is again not related to tax, but just is by Sunil Chaudhary. He says, my business is of packaged mineral water and I lose a lot of money in March and April because of COVID. I said, well, what is the remedy? So Sunil Chaudhary, this is not a tax related thing. So we cannot tell you the remedy of it, but just to let you know, we cannot answer you. This is quite related to your personal business.
His remedy is whatever the government is providing. If he fall under that relief, he should avail those reliefs. Government has announced, certain relief to the small businessmen, taxpayers, etc.
One other suggestion from Rishabh Jain is, this is Rahul for you, regarding your suggestion on point number 38, direct tax. I think the suggestion should be for extending the timeline for a carry forward of tax laws which are expiring on March 20 and March 21st. It's quite surprising. I can't.
Noted, Ritesh, noted.
Noted. Okay. What is the legal recourse we have to take while reducing the salaries? Also, can we reduce the basic salary? Again, this is not tax related. Can we answer, Rahul? This is Andrew.
Good not to go beyond tax.
Yeah. Somebody said there should be higher depreciation should be allowed. Pritam Kulapakar. Under section or which section, I don't know, higher depreciation, it's a recommendation or advice, or he's asking, we can't make it out, but he's saying under section higher depreciation should be allowed in the year 2021. I think we are already seeking this, Rahul, higher depreciation.
We are seeking in fact 100% deduction for all capex in relation to the new businesses 35 AD when people want to repurpose their businesses.
Okay. Okay. I think this answers for Pritam. Some Anuj Agarwal, as you know, export industry is very worse affected and company from China may migrate post-COVID. What should be the suggestion for government to give the relaxation in establishment of new production unit with any foreign that's only say with any foreign company? So I think Rahul, you can answer, I can reply.
Yeah, so it is very clear that as Paras also mentioned, that the situation is such that we would need to continue to fund and attract the investment to increase and find the capital within the country. And therefore, in the sectors which are non-critical sectors, we shouldn't see whether the money is coming from A country or B country, so long as it's a non-tainted money and in a non-sensitive sector, we should attract and invite, and wherever the capital can come from, we should encourage that. And therefore, even if it comes from China, let it come from China, so long as it is not in a sensitive sector. It can help you deal with the liquidity and also need of capital at the moment.
Anuj, one more thing to you, there is no restriction as like that unless you're coming in certain caps. You can, a foreign company can set up a manufacturing unit in India with practically 98% with items can be with 100% FDI. So there is no such major restrictions except what Rahul said it, and for certain few sensitive things. Now I see some questions from Rishabh Jain is again there. We should include a suggestion to include the benefit of weighted deduction under section 35AB for R&D expenses beyond 2020. Rahul, I think you've already included this, if I'm not mistaken.
We have not included it in 35 AD. We have included this in the R&D deduction as a weighted deduction.
Okay. So Rishabh, this is your reply from Rahul ji. There is one more thing from Sachin Joshi. Sir, is TCS return date is extended or now? Ritesh, I think you can answer. Ritesh?
No, that is not been extended. There is a notification which provides for certain exceptions. TCS, TDS, arrest provisions, etc. are not covered under that notification. As of now, the dates have not been extended.
Okay. There is a question, Alok Mathur. We should request government for extending the due date of GSTR 3B for all type of SSE.
The due dates have already been extended up to 30th June in staggered way. So beyond 30th June, I think the government would probably want to wait and watch as to how the situation evolves. And if
Ritesh,
you know,
this is for all type of SSE. Ritesh, this is for all type of SSEs.
yeah, because your return due dates have been, yes, it is for all SSEs up to 30th June.
Somebody, Vikram asks, when is the release? Vikram, you have to be specific which relief you are mentioning. Can GST fees be waived from last year? Sunil Chaudhary.
I think we've already answered this. I think Mr. Mittal did answer that we have been asking this from the government. Yes, so.
When we can expect refund for assessment year 1920? Satwanthan Singh. Rahul, please to you. Rahul, when we can expect refund for assessment year 1920?
So the smaller refunds that the government announced are going to be processed faster, and the larger refunds, I have no idea as to when they would come in, but I am sure that like SHM, other chambers are very, very keen that the working capital gets released from the government refunds, and therefore, subject to the availability of the fund, I'm expecting that in 3 to 6 months' time, we should get some movement there.
Again, for the IDT team, a very interesting question. Currently, ITC on capital goods has to claim over the period of 5 years, that is 60 months. Due to liquidity issue, 50 to 70% IT should be allowed in the year of purchase, that is 1920. This question is from Sushma Kothari.
Yes, so we did mention this, Pratik here, that we have included a suggestion that wherever in last 6 months you have a excess input tax accumulation, that should be refunded back, irrespective of the fact whether it is for capital goods or for input services, right? So we have not made a suggestion to amend the law, from a long-term standpoint. But what we're saying is whether or not kind of capital goods or otherwise, whatever is the excess input credit, that should be allowed as a refund. So that's a recommendation which we are putting in.
Thank you, Pratik. That's very well done. I think it's. Let me read, sir. Advance tax paid in 1920 may be allowed as refund within 15 days from date of filing return. Pritam, Rahul to you.
So I think the answer is in the earlier question that the smaller refunds would get processed faster. The larger refunds may take some time, but the government is also conscious and everybody is wanting that to be done earlier. But there isn't a categorization for a particular year's refund. All refunds which entail the release of funds from the government stand on the similar footing.
Rahul, another question for you from Samir Gogia. There is a new budget amendment on re-registration of ATG and 12AA up to 31st May, where the old trusts, etc., also need to pen down their old records, which may be locked down. Should we seek an extension for such re-registrations?
Yeah, good point, and we will seek.
For Mr. Mittal, after lockdown, GST offers call for pending assessment as well as GST audit. Can government issue circular time limit for 5-6 months? No call for procedure, something like this.
Yes, I think some time period up to 30th June, the due date were there has been extended. I think the person who is asking this question is intention that the government should keep in abeyance the enforcement things. wherever the government officer want to conduct audit, etc., which we already recommending to the government that government should go slow on all such high piece assessment, unnecessary notices, etc., because courts are not working. Even today, I understand Delhi High Court has already suspended their work till 31st May. Therefore, in such a situation, government should take a call how to give a direction to their own officers. This is not a time to make unnecessary litigations.
I think another interesting question from Lalit. Can SHM ask government to abolish all holidays of 2021, excluding 15th August, 2nd August, and 26th January?
I think it would happen of its own. You don't need to do that.
Yes, I agree with you, Rahul. Very well answered. Very well, sir. Is there any relaxation of filing 15C and 15CB for making payments under Section 195? I don't think so.
So far, there is none.
Will the crude price falling, should this not be the right time bringing petroleum sector under the GST ambit? This will help the industry as they would be able to claim the credit suffered on such products. Manish Mishra. Prateek?
Yes, let me attempt this. So obviously it's a large structural thing, whether this current crisis or not, whether petroleum products should be brought in under GST or not. That has been a constant debate. GST Council and all the states had decided earlier, because 1/3 of the total collection comes from petroleum products, that it should be kept out. I think they will have to go in phases, maybe start with aviation turbine fuel and natural gas. As we stated earlier, as far as ATF is concerned, that's a recommendation that we have already put because of the situation that airlines is in. Passenger fuels, I think it requires a larger consensus. Anything which is that structural, which requires a big debate, it is unlikely to happen in a hurry. So from a long-term perspective, we will keep pushing for this, but again, not the right timing for us to make this demand as of now.
Very well, sir. Again, back to you. What about the amnesty scheme and custom related? Suresh Kumar.
Maybe Ritesh, you can talk about this.
So as we recollect, we have discussed the customs amnesty scheme, and I think the conclusion was that at this time, companies may not have the relevant cash flow to even deposit the amnesty scheme amount. So while this is something which needs to be pushed and taken to the government, but this may not be the right time, because even if companies want to opt for amnesty, if there is no money, what is the point of the scheme? But yes, this is something which needs to be taken up with the government, and which would be in the second phase after we come out of the COVID crisis. That was what we was discussed.
We need to close it now in another 2 minutes. So may I request? And I would do the closing to thank the participants and also thank the panelists, and also request the participants that there are several questions we can see on the screen which are not answered, and please continue to send the questions to the SHM website ankitraghav@shm.com, and it is important that we deal with all your questions and suggestions, because that would help us make it more comprehensive, and we would surely come back with another event with participation from appropriate people from the government. And please watch the SHM website and the announcements in this regard, and look forward to see you again. With this, I would request the IT team to do a closer on this. Thank you.
Thank you so much, everybody. Thank you. Thank you. Bye-bye.
Thank you, sir.